Good morning. This is 3-2. We're doing about 134, maybe 135 tickers. And we had a red week, the summary, and we have a super strong Friday bounce. We've seen all of this before. I will have a video later tonight with details as to what I think we should look for. And I have a pretty good plan, so make sure you watch that video. And it's only 5.5 minutes. For today, I want to focus on the tickers that you guys have requested. And they start with Apple. The big picture in Apple is it sold off. Actually, Apple did a lot of work last week. Technically, it held up the market on several occasions, which is typical for Apple. Whenever the market is a little shaky, they hide in Apple. They ditch everything, and then they hide in Apple. It's like a knee-jerk reaction. And you can see where it bounced. Exactly where it bounced before, and that has been a pivot point since last summer. So, which is key, because I remember in the middle of the week I sent out updates saying we are at last summer's, if you look at the charts and the lines in the charts, we fell into levels from last summer for a lot of things. So it's a legit place to bounce. Okay, so for Apple, the question is, do they have enough to tackle the next level of resistance, which is 245? Great day. The low was 230, the high was 242. That's abnormal behavior. To be honest, the way the markets closed on Friday was puzzling, especially for like the banks. Like if you focus on this ramp, on the last few minutes, you can see how the day was normal and then suddenly it started accelerating. And this last burst in multiple tickers across multiple sectors was sus at best. So we'll see how they're going to deal with these levels this week. And for Apple, the level to watch for, where I think a lot of sellers will show up, is around 245. If Apple can clear 250, I think it can burst through the all-time highs and get to 268, 9, and 270. Let's see what happens at 245. And then as it approaches 250. 248 is also significant because of that candle right there. So there are a lot of sellers, I think, that will show up in Apple higher as we approach those levels. So very clear signal. As far as on the downside, you don't want to lose what you bounced on last week. If you lose 230 in Apple, I don't think it stops at 220. It probably will push the low 200s. In a series of lower lows and lower highs, it shouldn't be like one big drop. If it does lose that 220 level, you can count on maybe $15 to $32 of downside. So that would put it 204, low 200s, which I just said, and maybe even challenge this or lose it. That is the floor from August. Very important dates in August. So this is the battle. This week is very pivotal. I know we've said it every week, but because they keep moving the goalpost, they refuse to lose a level. So they keep pushing the battle out. But now the top is also coming down. So soon they will have to decide, and the repercussions will be a huge rally or a huge drop. Which seems easier, right? So that's the question. Adobe. Good company. I believe we bought the dip when it fell apart, and then it gave us trouble, and it ended up working out in the end. Right here on the big picture, I'm still zoomed out to a daily chart with no lines to simplify the message. You can see that it rallied last in February rally. It gave it all up, which is normal. When you break out, you want to establish footing. So now the job is not to lose the 430 level. Otherwise, you will retest the lows you bounced off of, which was 400. In order to get some upside momentum, I'm still big picture here because a lot has happened. You need 467 or 8 to close there and hang out. This will give you an opportunity to push to 490. I'm not very hopeful that it can go much further than this on the short term. Adobe is selling rallies, unlike the market. Look left. Every large rally has given up and made a lower low. And if that repeats, it'll be in the 360 zone in the next few weeks. If that repeats. That is a slam. I remember it was pretty harsh. And they're trying to recover it. If you look left, look how important is 436, 435. where they fell back into. You do not want to lose that level. You want to use it as concrete if you're a bull in order to push towards 500, and I don't think it will be easy. But that's the opportunity. How would I play this? I would not buy a call alone. I would split my risk between selling a put spread like we did and buying a call spread, not a regular call. That would be my impression. Earnings in 10 days, so they better do something within the next 10 days. Archer Daniels does not look good when the stock is falling apart and the markets cannot stop rallying. That's the big picture. Unlike Adobe, it did not hold that last dip, so now it has all of that above it as resistance. These are chart comments. I'm not commenting on any fundamentals here. I'm assuming you know that part. Rallies into 52 will be met with sellers. Rallies into 55, much heavier sellers. I think it's going to take a miracle to get above 60 anytime soon. These are trading comments. Investments, you should do some homework. The PNL is not inspiring. It's not a disaster, but it's not inspiring. Sometimes that's not enough. Let's see. Shorter term, they hit a couple of targets. Third target will be around 45.5. If you lose 45, you're going to 42.5. Meanwhile, you need to tackle 49.50. If you get to 49.50, maybe you get to 52. It looks very difficult. 49 is going to be a bear to pass. Like very difficult, I should say. Oh, look at that. That line, which is red, and that's around 49. I said that would be the target if you lose it. They went there. They overshot a little bit. It's not going to be easy to recover that. All right, I like it. Consistent comments. Even when I don't remember I did them. Unfamiliar with this. Argan. Let's see. Good P&L trend. Sales growth looked good. The annual sales growth questionable, but of late is good. That's good news. I think it wants to retest the floor one more time, 124, 120. And you don't want to lose 120. If you do, you get to the low 100s. Conversely, any approach of 145 is doable, but it's going to be a lot of sellers waiting. Have you heard the term overhead supply? That's what they mean. I bet you if they come up to this zone, there's going to be a lot of sellers where the letter R is, and you must hold this one, otherwise you come to here. So that's the debate. A lot of sellers above, and the buyers better hold up, and if they don't, well, the better place to get long is around the X. Okay, well, I don't know what's the question here. If you're going to send me a lot of tickers like this, you're going to get the same answer. What are you asking here? To go long? Are we serious with this? What the heck? Someone give me the logic how this P&L inspires that move. It must be that, okay, in the future, they're going to earn $1 zillion doing provision of insurance broker. An insurance broker? No, nice short? Hell no, I wouldn't touch this garbage. Stock, not the company. The company is just fine maybe. But this stock price action is absolute garbage. No, not for me. Clearly, they want up, and away. I have no idea what is the inspiring. It's an insurance company. I don't know what thesis that insurance company have now that bear this. I'm going to put it on my list just to watch it for giggles. This is insane. I mean, put it together. The logic of this stock looking like this with this P&L and NVIDIA losing its lunch last week. It just makes no sense, right? This is a TH. It's too high to chase for me, and it's too hot to short. It's just garbage price action. Where's the advantage? Logic, it's not here. Levels, it's not here. Technicals, they're not listening. So what are we trading? Hope that it drops? Yeah, when it drops, it's going to crash. But when? Not for me. If you're long and you're asking permission to get longer or book profits, you can book profits. But I don't have an advantage for you. Let's move on. That's enough information on that one. Akamai, it's a dinosaur. It's been around for a while. Technically, they needed to hold 87, 85, and they didn't. So now the question is, can they recover 84, 85, or 90? If they can't, I think they will probably drift lower, be stuck or drift lower. Luckily, they have support, but that dates to March of 2023. 2023 now is going to be very important for my comments this evening. Pay attention to the message. Late 2023. This guy is early 2023, so he's already in trouble, technically. Short-term, levels to matter, 85 on the short term. I think here there's going to be a lot of sellers. Other levels of difficulty will be somewhere around here. That's resistance also. I'll put the comments now. They'll stay on the chart. And of course, if you get up here, there's going to be a lot of trouble too. So you see how the rally back needs either a burst to get through all of this, and definitely hold. If you want a battle to hold, you want them to hold this area here. Okay, so you want to hold this support zone. If you don't, you're coming down into this zone. I don't know what's to the left of that, but that's AKAM, ALAB. So a lot of you like this company. I don't know anything about it other than what you've told me. So on paper, it doesn't have a lot of history, like in the public eye. But whatever history it has, it's high explosive growth on the quarterly. And so it's not a bad picture for the long term. So now the question is, it's a momentum stock clearly. So how do we handle this? Let's use some logic and then some technicals. So it came out, IPO, very volatile. They told us where the zone that they want to fight over, and that's around 70, give or take $2, the middle of this huge range. They fell apart last year. They took their time coming back. That's good. That means this whole zone has been established as solid performance, big battles. And then they broke out from the middle part. So far, perfect. What I hated is these gaps, get up and run. That was emblematic of last year. That's what we did. And so far this year. So one would say, what? And then coming back to real life. So the base is solid. It's wishy-washy, like it's solid. Look at my comments, solid support base. That is still correct. So I would say they're falling into solid base. Unfortunately, it extends much lower if there needs to be more selling. So let's put it this way. If I'm long and I didn't get out here, this is not where I get out. If I'm long for a trade and I'm losing, I would exit on a rally towards 97. If I'm long and I wanted to sell some covered calls on any strength, I would sell the covered calls. Let's see. On Friday, it had a pop and drop, or on Thursday. Let's see here. Let me zoom in. It looks like Friday it popped and dropped, and then they tried to recover. Interesting. Oh, and Thursday as well. This was disappointing. All right, so now we have shorter term comments to deal with. Is that there's a huge failure above us centered around 83, 82. And I would imagine that anything above 78 is going to be very hard fought and lower than 78. Now 75 is a problem from Friday. So 75 from Friday, 78 through 80 from the day before it. So now the bears have a slight advantage short term, but the long-term comments still stand. We're inside of a zone that has a backup zone. So if I'm an investor, I'm not shaking in my boots, but I would use strength to either trim some, sell some covered calls, etc. AMD, I'm not a fan of AMD anymore. The opportunity in AMD is becoming less attractive, much less attractive than before. Still a good company, still good leadership. The AI craze came and left almost, judging by the behavior in the king of AI, which is NVIDIA. And 132 through 140 now becomes a concrete ceiling. What's it going to take to get above 140? Look at it. There's a pile, and I mean it, almost a full year of battles above you. A full year. All of 2024 is above you. So I think it's going to be a huge undertaking to get above 144, 145. If it approaches 145 and I'm long, I would sell aggressive covered call, or if it was a trade, I would exit. Now, luckily, as it's approaching the levels below, those should be bulletproof as well. And it's a zone that extends through 70. I know it sounds ridiculous, but that's the price action we're being dealt. Unreasonable rallies and unreasonable letdowns. And you can mirror that statement across everything, including the market. And the market is the worst of them, right? So this is just one piece of the market, and it's reflective of the price action and the craziness of these Wall Street folks these days. This here has been a target for multiple reasons, but it's not the target. Let me explain. Notice I haven't shown you all of my lines, right? So we will look at the lines last. So every one of these peaks is a ledge that they try to hold on to. And once lost, becomes a trigger to a new target zone. So this last one alone should target about $15, and it hasn't hit that yet. So this can drift $15 just to meet a target that was launched by losing 107, 108. Wonky statement to say, look left, they're selling rallies. Rally sold, lower low, rally sold, lower low, rally sold, lower low. So the next rally, use it to fix your problem, not to start chasing. Lisa Su needs to come out with a headline like Jensen Huang. Let's put the lines here. Okay, so this big red box is an earnings reaction in one day. Clearly, the whole thing represents a bunch of sellers. So any rallies into this giant box matters. Resistance line, we will move it, still there. Support line that needed to hold, didn't. Now it becomes resistance on the way up. And I'd like you to see something here. This thing. This was a copy-paste from prior behavior that I copied and pasted here, and look how it played out to the T, almost. Look at it. So now what if it happens again? This is the worst case scenario where they continue selling it. I'm just copying and pasting it over. I just moved it. I didn't even copy and paste it. So the next rally, this is exactly what I would expect to happen without a catalyst that makes it stop here, come back, and go up. Okay, so can they stop this behavior if they come up to here, and once they come down to here, do this and change the behavior? Can they do that? I'm not going to put it on here because that's just speculation. This is the better comment. American Tower, is that what this is? Yeah. This is a bearish spot. They need to get to 216. Otherwise, it's easier to come down to 194. These are short-term comments. I'm not going to talk about long-term investments. A solid company, maybe. This P&L is pretty crazy. I don't know what the hell is going on. Is this a dividend play? Please find better dividends. I'll give you levels that should be bulletproof on the way up. 214 through 218 should be very difficult. Anything inside that yellow zone. Shortable, maybe, but it's not that kind of stock. If I'm long for a short-term bounce, I would be locking my profits. Amazon, terrible price action. And if we do have so much to say, let's talk with the technicals first. A bounce to 218 is doable to 220, but I think they already did that. That large green M on my screen with that long stick down here. Target 1 is 219. Target 2 is 228. But now what's it going to take from Amazon to take out 220? Why 220? I'll point it out for you, and you'll probably guess why. All right. So I like to use the earnings reports as an emotional what kind of a statement. So here's a line that deserves paying attention to. I wish I had a different color. I'll put it in white, actually, sticks out. And you can see how this stick right there on the 27th matches this one. This was the mother of all selling and the mother of all rebounds, whatever the heck that was. Oh, yeah, the January 27th crash that recovered in 2 days and made an all-time high. Like, is this not the dumbest price action that you've seen in your life? It is in mine. And then repeat the process a week later and fail, and then lose it. So that zone from here to 228, show me the thesis that's going to bring Amazon past these levels in this environment. I would short rallies in Amazon, or if I'm long calls for the short term as a trade, I would use these strength bounces in order to fix my problems, not to expect that they're going to make a new all-time high. They may, but I think it's difficult. If you lose last week's lows, you're going to 192-ish. And this big red mark is one tick in Amazon. I bet you it was done around the earnings. Yes, this is that's one day tick. So the whole zone is going to be near impossible to cut through with multiple boxes inside of it. Here's the other comment, which goes to the whole economy. So I keep seeing large corporations introducing bargain products, bargain services. So I mentioned NVIDIA and Apple, but focusing on, hey, we have a cheap guy that we can offer, $600, $500. Ford, I just saw an advertisement for 2 popular pickups. The quote was under $30,000. I haven't seen a car advertised with the message under $30,000, and I cannot even remember when I saw a car company advertise a car these days that says the front-facing statement is under $30,000. 2 of them, whether you can get it or not, but that seems to be it. So what am I saying? Why is that important on Amazon? Companies do that when they feel that there's a recession coming, and believe it or not, they have better economists than the government economists that you hear on TV. They have their own people. They know better than the people that are outside in the government, in the public sector. So maybe they see a recession coming, and this guy will be hit first. Everybody that buys everything, I kid you not, there isn't a day where I don't have Amazon packaging coming here because it's convenient. So we shop. The U.S. shops on Amazon. So I think Walmart and Amazon are going to be good gauges for us in the next couple of months to tell us what do they expect down the line. Technically, I would sell rallies. If I bought this for a swing trade from here to 230, I'm not crazy, but I'm saying use that to lock in profits as a trade. Because if we do go sour, this one can get below 200, very firmly below. I do like it though. Same with this one. We've covered this one to death. We bought the dip in Arista, and it played out right away, but now it's back to evenish. So the trade is okay on this bounce. The thesis was that these circles represent the same area battle, whatever you want to call it, back to last year. So they're not going to give it up easily. But you can see we have been breaching it a little bit more comfortably, a little bit lower than here, and now they're still trying to recover. So this one has great fundamentals. Look at this bulletproof P&L, and I think this one will struggle as it approaches. Well, should find sellers inside this box that is above here. And you can repeat that comment higher. Believe it or not, there was a period of time where I used to do all of this off hours, so I did the homework twice. I don't have time anymore. I would do all of this and just speak about it next time. Okay, I would be floored if they go easily above 100. Anything above 104 through 114 should be very, very difficult from a trading perspective. Solid company. If I'm long, I'm not shaken out here. Aplovin, long story short, garbage price action, not a garbage company, great P&L for a high growth, hyper growth company. But I tried to short it multiple times for somebody on behalf of somebody else. I got roped into it, and it was interesting, and then I gave up on it. Had I not, I would have made my money. What am I saying? Expect the unexpected. Honestly, there's no reason why it's not at 180 in the next 6 months or at 460. If I can't tell you with certainty why it could be $300 above or below, it's just crazy. It's a crazy stock. So if you're an investor for the long term, there's nothing to do here. I'm not adding. If I bought it here, I'm not adding here. Because if I bought it here, first of all, anyway, let's say I bought it here as an investment and I add here, I've averaged down here. That's still an all-time high. How about you average from down here so you can be in here instead of up here? For me, If you're looking to get long and you're nibbling here a starter position, like 20% of your total allotment, that's fine with me. Even if it's not a perfect entry price, at least you can double and double and double, and you end up averaging down in here. Great P&L. I hate the stock chart. Be aware of what's going on. ARM, great P&L, weird company, weird margins, wonky COGS. So the cost of goods sold is really, really low because they don't sell anything. They sell ideas and processes. And then on the operational cost, they give it all up. So maybe that's fixable. It's easy to fix an operational cost problem than a margin COGS. So technically speaking, you want to hold 121, 120. If you don't, you're probably going to 100. It seems impossible. There are plenty of support zones between that and 100. You can see all these lines on my screen. A bounce can come and probably should come. I'd like you to see this blue line. I'm just going to extend it to the right and see how it played a role here. So what I would like to do is move it up to here and tell you that that's going to be a problem area 1, and that's a problem area 2. The support zone that we said needed to hold didn't. That whole zone should be a lot of resistance here. There should be a lot of sellers inside this. Floor, no. A good bounce, yes, off of this. Let's see, what is this here? Yeah, we can get rid of that. All right. Yeah. So technically, you could be in a target zone from losing this blue zone area above. It's going to be very difficult to recover all of these steps above us. This one reports earnings this week and might affect all of these stocks that we just covered. Broadcom. Good P&L, earnings in 4 days. I recently shorted it and made money, but it was difficult. So this can bounce to 215, maybe even 228, and then it's going to be really difficult to break out. But if they do take out 238, that's why I'm saying difficult. It's going to have $10 a chop. Okay, so every support line here is now resistance. So I will extend this one a little bit and move it over to the right. Copy it and paste it and bring it down. And, this red line here is drawn automatically. So I'll put mine a little bit below it so we can differentiate them. I'm just picking up areas of sellers. I'm going to delete that guy and this guy. So this one was support, now becomes a problem. And it's a zone, this last one. Area of interest, did they cover it? No. Why would you not? Look how close they came to covering an area of interest. These areas of interest are open candles from back there. Technically, they're open orders left unfinished. So we do have a support zone and a backup support zone. But what if the rally cannot follow through and they come back like this? You do not want to lose the support, because then that's the case. So be aware that this, whatever we put it here, purple, be aware that this purple line can happen. Okay. Earnings could be a game changer. It rallies 20%, falls 20%. I don't know. It shouldn't do either. It's fairly predictable. I will catch the falling knife. You can go long here for a bounce. But I think all of these lines up here, they're going to be difficult. Oh, that's an ugly R. You get the point. This one just fell on earnings, I believe. Fell before the earnings. I don't know what the heck happened here. And then bounced on earnings. Okay. Okay, so this white circle I put recently, it says huge gap in volume. That's because the rally was too big and there was no consolidation. Now they're working on it. It's still a huge gap in volume. It actually extends all the way to 440. Okay, show me the environment that gets this above 600. And if it's not going above 600, it's probably going to 420 or 400. That's my prediction. What am I saying? It's either, it's easier to drift lower, and it better not lose 480. If you lose 480, you're going to probably come down to 400 or lower. It has a bunch of supports Look at this one. Why wouldn't they come down to this one? They needed to get down to 472 or 473. They stopped a little short of that. So now the obvious selling zones, there's going to be a bunch of sellers inside that. Of course, you take out 720, you're going to 840. Good fundamentals, not awesome, just good. I don't think they even have competition. It's a pretty weird company. These, I think they've been filled. Yeah, this one has been filled. So I'll leave it there, but I'll take the hash marks out. It's still a battle zone. This one has not been filled. So this has been satisfied, except they took a detour. Don't lose 480. Boeing. Okay. So I was short Boeing, and I'm no longer short Boeing. I shorted Boeing by selling calls on the way up. It was my way of revolting against the industrials. And so Boeing holds 172. If you don't, you're coming down to 166. So the line to hold is this one. And if you don't hold it, you're probably endangering this much or more. I will catch the falling knife. I don't have a problem. The reason why I closed my short, not because I was afraid of a rally, it's because it was tying up too much money for not a lot of reward. Risk reward told me to get out. This is no longer there. This is no longer there. But this is okay. I'm going to borrow a piece of it and say, from here to here. If it comes back up into the zone, I will reopen my trade, which was selling a call naked. So look left. The whole zone from 185 to 163, 162, has been pivotal since the last earnings report. They've been going back and forth inside of it, and they're right in the middle of it. So maybe it's an iron condor candidate. I don't know why I would short it here. As far as buying a put, I don't know why I would buy a call, because it's literally in the middle, and it's tight. Lower lows and higher, lower highs and higher lows coming into a pinpoint. Baxter International, okay. It's healthcare products. I'm always at a loss when P&Ls look like this. Look at the bottom right. Trending down, nothing exciting. There's no net profits, there's no growth. And then the stock does okay. I just don't know. So technically speaking, this was not a place to get long. If you had come to me last week, middle of the week, and you said, oh, I just got long Baxter, and I was like, what? Look left. If you go back to 2023, March, they bounced very harshly off of this level here. And then they did it really well twice, and then fell apart, lost it, came back above it, fell apart, lost it, came back at or above it, fell apart, and made lower lows than anything else in the past year. And now you're going back into the level that allowed for that to happen, and somebody goes long. That somebody is going on emotions and not facts. The fact is, this stock is a sell up here if I was long. This is not a starting point last week. Let's see if they can get to 37 or 38. 37 would still be shortable. 38, I would still consider it an exit as it approaches 38 and 39. 40 plus, okay, it's like I would say, what's going on? So if you tell me, oh, it just triggered an inverse head and shoulders, all right, I'll give you that, but I don't believe it. So that means 38 and 39 is the target, which reinforces what I'm saying. As it approaches 38, I'm exiting, not entering. BBBY or BBY, Best Buy. Are you kidding me? Yeah, okay. I'd be a seller of rallies. I've bought a few things on Best Buy in the past couple of years. Most recently, I think I bought a satellite internet thing from Elon's company. I'm drawing a blank anyway. So the rallies, I think, will be met by harsh sellers. This blue box, I don't remember why I drew it, but it's still there. Je dirais même plus, as they say, from an old show. Wow. Okay, so check out this seller. Big resistance. I was going to say this is a fair value gap, but it isn't. It's freaky. And if I were to sell a line, I would sell this line right there. So as it approaches these levels, it's a sell and there are earnings coming. So if it pops on earnings, I would short it because the P&L is not that great. And if they say, oh, we grew 2% and we forecasted 4%, and because they, quote, beat the earnings and they rally on that, I would be planning on shorting that. But until then, it's a coin flip and I'm not going to argue with it. Okay, so this one will concern me. Biogen. So the XLV, the healthcare sector, has been on a tear. Let me see if I can prove it to you. Yes. And this one continues down and down. And the sales are dropping and the profits are dropping. This is not a sector I trade with. Okay, I have traded Biogen before, but not in a zillion years. Okay, it's falling into a baseline, but it's so old. It's from 2013. And it's so broad, it could be anywhere. And losing 220 in theory brings $100 or more of downside. So okay, we might be approaching that level, but I don't have any concrete evidence why I should get long here and not a little bit lower or a little bit higher. So if you did just go long, you're not crazy. It's just a lot of hoping. Hopefully you didn't go all in. If somebody wanted to own 200 shares and got started with 100 shares, that's probably the best, and sell some covered calls against them. Add to them later. Bill.com, the dip was doable. I believe we sent a trade, this one. It was probably selling a put or a put spread. I don't remember which one we did. But I still say, the P&L, see, nice. Kind of like ALAB, looking P&L, short, relatively new, pretty aggressive. And this was not warranted because the rally wasn't. Like somebody asked me several times in the last couple of weeks, why is it falling? I was like, because it was rallying. That's what happens. You rally, you fall. Look at it. It's symmetrical. Pop, drop. Nothing happened. All of this was BS. That's what happened. So now you have a good base. And the base extends through 42 and 40. I wouldn't mind being long. Baker Hughes. Let me rephrase. I wouldn't mind being long as the markets is still okay. This one could get to 45, 46, and then the sellers will show up on Baker Hughes. So if you want me to put the letter R, it'll be inside these two. Whew, that's an ugly color. Let's change that. Make it red since we're saying resistance on that one. And support. You better not lose the lows from yesterday. If you lose them, you're probably going to drop this much. How do I come up with these? This is my own intuition. Technically, you should come down to 38, but I'm not going to do that. Areas of resistance where they can actually fail. They have unfinished business here somewhere. It's actually a little bit thinner, but then the words will disappear. So another level of contention would be right there. Anything above 47.50 is shortable from a trading perspective. Okay, so BLDR, not for me, but let's say whatever happened in the last bounce repeats itself, it should look like this. So there are sellers as you approach levels above. So this zone should be contentious. Same with this one. And there is no support here. You're losing support. So here's how I would word this. The bulls better get to 150. If not, they're probably going to drift. They're risking drifting to 122, 123. And if you do that, you'll end up down here somewhere. If this is purely based on consumer spending and investing in their homes, this might be telling about the economy maybe. Like watch their sales, like Home Depot type of a deal. I don't know if that's what that is. BMY, everything I said about the healthcare applies here. So I haven't traded Bristol Myers in decades. this is as boring as it gets, but the stock isn't. So whenever this happens, why? Anybody that went long here, I'm asking why. Anybody but that went long here, I'm asking why. So technically, you need to blow past 61 in order to get for $3 to $6 of upside. Meanwhile, you just erupted into a huge rally on what? I honestly don't know what you're asking there. So I will just say that if I look left, they're trying to recover levels that have been failures. So as it approaches 66, anything above 62 is difficult. Doable, but difficult. Anything above 66 is shortable, just from a stock perspective. So I will say it's just as easy to get to 50 than it is to 66. And it's pretty hard to go below 50 and pretty hard to go above 66. That's a fair statement. Berkshire. Lord. Okay. I shorted it on Friday. How about that? What are you asking me? Does that answer your question? Is this not crazy or what? Like one of the most boring P&Ls on the planet, and it explodes and leads the market up on Friday. I mean, this is insane. This late on Friday, this doesn't happen in boring stocks like these. Okay, this is crazy. So I am short in multiple ways. If you want to know exactly how, you can come into the live room. I think I've shared one of them and it paid. This is like my 6th short in the last year. This one is now underwater, barely, but we'll see how it plays out. I'm not like saying it's a bad company or anything. I'm saying that the price action in Berkshire is weird, and I'm paying the price in order to see how it ends. I'll update you on that one. Citigroup, same comment. The bank rally on Friday, let me show you the visual. This is the banks. By the way, Berkshire is the largest component of the bank ETF. So this behavior on Friday is highly suspect. I want to see what they can do with it. So maybe the market is looking to go another 15% higher from here, and maybe these guys are going to lead us. So whatever happened with the tech rally, now it's a bank rally. And we all know what happens when banks go crazy. 2008 happens because they become they think outside the box a lot, and then they come up with ways to break the world. And that's what bankers do. Every 12 years or so, they probably 10 to 15 years, they come up with something that breaks the world. So let's hope not. This here is not an obvious entry point. If I look left, that's what they failed a couple of days ago. That's the short-term comment. This here, are you? All right. So I'll bite. Let me see. When was? Oh my God. Okay. So I would not touch this stock, because there are people out there that are investing now that have no clue how charts work, and they look at this and they say this thing is going to $200, and they might want to take it there. Not for me. I wouldn't touch it. Look left. These are battles from 2018, again from the pandemic, and then 2021. If you close, this is a monthly candle, so every candle is a full month. If they close the month, they just closed the month. That is the highest close since 2009, the break of the financial world. This is okay. I'm not going to say anything. It's just not an obvious entry point. But be careful of the irrational market that might want to take it to 120. So short it with finite amount of money, like buy a put or a put spread, like an aggressive put diagonal. If it works, great. If it doesn't, you lose a couple of bucks. I think there's a good chance that this one is in the mid 70s in the next month or so. Fair enough statement. CAVA, supposedly the next Chipotle. I don't think there's going to be another Chipotle, to be honest, from a financial perspective. But this one is showing good promise. So I would be a buyer of dips on CAVA. It is a momentum stock, and I don't like how it cut through the support zone like it wasn't there. Yeah, it had earnings, but it was falling before and after. So Chipotle did not do that too many times. So I'll give them a pass as they're falling into 75. 75 should be a good base. I'll put a line. It's not really a line. It's a zone. So, oh, I do have that. Oh, look at that. So I thought from here that I drew the white line, that they would pop and drop. It was perfect. So this white thing played out. This represents it. Perfect. So now I would say they repeat. They're going to try to pop, and I think they're going to hit a prior problem area. Is this mine? Yes. So I will copy that one and put it here. There should be sellers between these two lines. If I'm right about it, then this red path is probably doable, which is not a big deal. It's just a tiny bit lower than where they bounced off of. So it's a buy as you approach the zone. If I just started along for the long term, leaving room to double, I'm okay with that. They could be hunting 70 or 65 on this dip. I wouldn't go all in. That's what I'm saying. Carnival, I wouldn't touch that. So they went and overdid my upside target once they popped out of this one. So I'll move this backwards this way so nobody gets any ideas. And this resistance, are you okay? So then let's repurpose, reuse. There should be some support inside this zone, but it's wide. I don't like this industry from an investment perspective. Like if somebody said, can I borrow $1 billion in order to buy a boat and put it on the ocean? I'll say no. Because it's like headline city. There's going to be a lot of sellers up here. Let's see what they do with it. And sellers up here. It seems easier to drift into this yellow box. I'll say it nicely. You might rally. I would use rallies to fix any short-term problems. And if I'm buying a dip, I would want to be inside the yellow box. Charter Communications. Starlink, yeah, earlier. Thanks. That thing is great, by the way. Could be greater, but it's great as it is. All right, so we identify a zone of consolidation a few months ago in October, November, and they did use it to bounce, right? And they broke out, and I thought they would struggle here, but they didn't. They overshot. But then they lost the overshot, and now they're going back into it. So I'm going to move this blue circle over to here. That's still the problem area. And in fact, anything above that will be shortable. Shortable. I don't sell calls. I mean, I don't sell shares when I short, okay? I control my short using sold call spread or sold calls in some stable stocks. I don't know a lot about this, so this is not one of them. For the short term, they are buying dips and making higher highs. If you look at it, dip and a higher high. Dip, and they could be going for 430. So don't be too stubborn with your short. Credit put spread, debit call spread is if you're chasing that. You're not crazy. They did it before, twice. So that's what I would do. And if I'm long, I would sell covered calls. Comcast. This is one of those mystery stocks also. I used to trade it, and I remember one thing about it is that I would have a credit spread. It would be working beautifully. And then out of the blue, boom, it goes away. It gets blown out. So I would recommend you don't trade it short term. Like don't trade it with the week expiration and close it early. The level around 36 and 37 and 38 is shortable, like in a big way. This drop was violent and they cannot recover it. And that's their second effort. And then if they do recover it, they have to deal with 39. Doesn't look good. So the bears have control of levels. No one's controlling the action. They have a high, they have a low, they're right in the middle of it. But the bears control the levels. Speaking of CAVA and CMG, look at this beautiful breakdown that paid. Whoever used these nailed it, right? So now the problem is they're stuck inside of a one candle reaction to the earnings. I should put a box around it. One candle reaction to the earnings. They're stuck in it at the low end of it with a huge pivot point around them, 55. So there is a chance that this company has been fallen out of bed with the investors because they lost their CEO. And as high as where the CEO went, rally was on Starbucks, tells me that a lot of people gave him all the credit. So if I was a fan of the stock because of him, I'm no longer investing in the stock. I'm probably investing in either CAVA or Starbucks. And Starbucks is in the food industry. So I think CMG may have lost a lot of fan boys and girls. Let's see if it can take out 57. I think it's shortable into 57 in the sense where if I'm long and I make money off of it approaching, bulls need to be up here, else 51. That was the comment back there. And they went to 51. 50.8 and 50.7. So that's 51. That was a good call there, right? So now I would say seller zone up here. Conoco. Okay, so if we're pumping and making oil cheaper, all oil companies should have a lid. The letter R's, everything stands. Look at the chart. We have support below and resistance above. Nothing changed. In fact, it's probably target 2 is 102. I doubt it gets there, but if it does get there, I would exit. For them to have a shot at 108, they need to clear 102 like strongly. They have just as reason to do that as losing 95 and 94. And if you lose 94, you go to 89. And this P&L, not inspiring. The industry, not inspiring. Not for as long as Trump is in office. Costco, buy the dip is the knee-jerk reaction. A bullish harmonic, all right. My God. Earnings in 4 days. So we'll see. This company is on rails. I don't know what to say. The chart is very weak. In other words, like it has a weak makeup. So if the hits the fan, it could drop to 970 like this. But they don't allow it. They buy every dip and they make a higher high. I don't short Costco. I did once or twice and it was hard. So buy the dip, and I don't buy the dips at all-time highs. So for me, Costco, if I had a watch list and Costco is on it, and I'm not involved in Costco, I would move it to the end of the line. I would put it in what I call a penalty box, where I don't even look at it. So what I would do is I would say, wake me up if it goes to here. Until then, I'm not going to look at you ever again. But you guys asked me for tickers, so I have to look at it. You have a very wide area of support. I think 980 or lower should be bulletproof on a bad week or two. And you can make a run for 1090 or 1100 on the earnings. I know the earnings will be strong. It's maybe what they say. I don't know if they're the type of company that actually verbalizes what they think about their future sales. Maybe they warn, maybe they don't. So if you're a fan of the company, you should go back and read their interviews to see what the message was. If they actually verbalize, let me know, because I would be interested for it fueling or negating my concept that big companies are hunkering down for something to come. CRDO. Credo. Earnings in 2 days. So a huge rally, huge drop, back to the base of the rally. Huge rally, huge drop, back to the base of the rally. So now we've established 50 is where they want to bounce from. Let's not lose 50. You lose 50, you go to 36. And rallies into 68 and 72 are sellable. Earnings in 2 days. I wouldn't take big positions into earnings. CRM. Okay, if you were in the live room, you made a bundle of monies on CRM. The earnings reaction was very favorable to our bets. I highlight the word bet. Okay, so this is the provisional earnings reaction. Why didn't I extend it down to here? All right, so let's put another box. I don't know why I did not include the wick. There. So this zone, anything below 287 should be absolute bulletproof because of how this one and whatever other box I have. So there should be a lot of buyers there. If I look left, I'll probably match it up with a breakout level. Resistance shortable zone, yeah? So now it's become support. So this is support zone down here. There is unfinished business from back then. Oh my gosh, look at this. This one wick was not a coincidence. That's how they finished the business that was unfinished from back then. October. Okay, so now that we've done this, area of interest, they fill it. So we'll take that out. Let's replace it. These are all there because we never went back. These are all resistance once we go back, if we go back. I say if because we don't know. There's going to be some sellers inside this area if we come back to here. And there's going to be sellers at that line and anything in between. This is a heavy overhead set of circumstances. I would be selling rallies into once they lost 315. Now 315 should be like, what? Show me why you're going to be up there. Great company, but it's going to be hard to overcome all of this greatness. CrowdStrike, same. So this is the company that scares the world with the largest breakdown in history of tech. Not my words, Microsoft's words. Rallies back to where they fell from and then use it to break out. And now they're coming back at it. In theory, this whole thing is a support zone. Anything below here is support. Like this box that says resistance, forget that. They didn't even slow down there. So this whole spot is support zone. You tell me where they stop. And you tell me how they're going to handle this area, which should be full of sellers. So if I'm long for a trade and I approach 410, I'm out. You can repeat that higher. Unless they take that out. So the P&L is inspiring because they grow fast and they're kind of a crazy company. So if they go to a new high, good Lord, they go about $100 higher, plus or minus 20 bucks. I'm not kidding about that. This is all in play, but you need to tackle this area first. Very critical. So the bears need to not let it go too much above 425. Okay, so why are we discussing Bitcoin when I'm not covering Bitcoin here? Cisco. A boring P&L, a dinosaur of a company, that's a good thing. I believe we went, I'm holding a short, that's what it is. I shorted the spike and I'm making money and I shared it. And that trade is green. For as long as that trade is green, I'm not going to get out of it. I want to see how they handle 65 through 67. 66, sorry. 66.3. There was a ghost pop up there at some point on 227. And we'll see how it plays out. A ghost pop is when one platform shows me a wick that I don't see here. Thinkorswim on that day. Maybe they're hunting that. So I will be watching the put I own. I don't buy puts often, but when I do, sounds like a commercial, right? A bunch of support. Like there's no reason why they lose 58. But maybe they go for it. So now I'm going to say good trend, short term, in a questionable trend in the market. That's very good. Maybe 67, maybe 59. And I'm holding a put to see how it does. I may change my mind on the put this week. CVX looks like it wants to break out. So there might be a test of 161.5 this week. Although if I look left, that's pretty easy resistance to break out. I think if I was a market maker, I might want to trap some bulls. How? I set up a clean line of breakout, and then I break out. Everybody jumps in. All the stops come in, the bears, and everybody jumps in, and then I do this. If I was a market maker, that would be my behavior. I think there are sellers hiding above, and if it pops, it drops. So let's see. If you're trading, you might want to start, like sell a call spread on rallies. And if you want to trade the downside, buy a put spread and have a free try on a small dip. It's not a correction or anything. Good company, good management, etc. Deckers, like this P&L, should not be doing this, right? The only reason it's doing this is because maybe they overdid it on the way up. What goes up must come down. Like I said, why is it falling? Because it was rallying. Like, why did it go from 95 to 220 in about a year? Why did it do that? If you can't answer it, then you shouldn't ask the question, why is it falling? This is a base. It's not bulletproof. In fact, there is a path to 85 on this. I'm not saying that this is what will happen. This chart, these arrows came to fruition. This chart now is in danger of drawing a pretty sizable head and shoulders. If this happens over the next few months, weeks, and they lose the support zone, which can be as low as 131, okay, they will try to recover it one time, and if they fail, they can go all the way down to there. I'll give you the targets on that one. First target would be this much. Second target would be about, ooh, look at that candle. Wow, I'm going to highlight it, about that much. What the heck? I don't know what that is. I'm going to borrow it. This is a shortable spot. So I would be a seller of rallies here to see if it can curl back down. I'm not saying buy a put because it's going there. I'm saying if it does pop and it drops below this 130 zone, 131, get out. DELL reported earnings. Let's take that out of here. Falling into the support from early Feb, and it has backup support at 88. Let's zoom in a little bit. Ooh-wee. All right, so this was my area of interest. I verbalized a pop and then a drop to 104. Here we are at 103. So everything I saw in the options market for last week played out almost to a T. There was a pop, and then there was a drop, and they closed right around the low end of where I thought there was downside pressure from the options. Next time I do have an options event, you might want to join because of this, because it's an easy thing to start looking at, and over time you become an expert at it. All right, so now I'm going to move this and say that this was the earnings reaction. So now I know that when they loved it and they hated it in the span of seconds, that's the range. So how do I use this information? The easy way to do it, I'll split it in half. And look at how pivotal that half would be. Look, I eyeball the half. Nailed it, right? And look at what it matches up with. Pretty good pivotal zone. Look at that. Look at how many times they use this area as important. All of these ticks are here. This one. Yeah, that's an important level for a long time. Tell me what it's going to take out the half before they lose these wicks. So this week, they better not lose 99. Otherwise, they drift down here. Don't short it, but use rallies to get out. Dollar General. Be careful investing in these companies. You need to break through 80 in order to look at 86. This is still the first video? Gosh, seems like I've been talking forever. It's been an hour. A lot of buyers below. So we'll see how that plays out. And it's stuck, buyers and sellers. I wouldn't know what to say. 11 days until earnings, I would be scared of the earnings reaction. I can do that. Okay, so this is a long wick. So it's an earnings reaction that I'm going to take out. Not take out. I'm going to add a box. It says a lot about a company's, the investors in a stock. When they show you a reaction based on pure emotions, earnings are very emotional. I love it. I hate it. Buy, sell. That is it. And they're right in the middle of it. it is not a good starting point. In fact, if this gets to 115 or higher, it's shortable. So I'm going to put an alert. You could start now with a credit call spread, provided the market doesn't go out of control this week. And as far as where I would expect it to go after a pop, it might come back to the bottom of the box. So if it gets to, say, 115 or higher, I would sell a call spread and maybe buy a put spread, expecting it just under current price at the time, expecting it to come back down towards 112. And that would be a short, a very easy short attempt. Nothing's easy in this environment. DOMO, they're selling rallies. So now we have a lot of support below and a lot of resistance above. 8.6 or higher is going to be difficult, and it's going to be difficult to break through 6.6. Earnings are coming. Buff up your shiniest coin. Enphase, it alerted me last week. It's losing support. Be careful. If they don't get back up to 61 or 62, they're probably going to 51 or 49. Fundamentals are what just happened in the fundamentals, right? Year over year. Quarter over quarter, they're stabilizing, but this differential between the 2 years before that, probably pandemic driven, pandemic relief driven. So it's going to be scary if it cannot get back up to the neckline. So it needs to be like whatever number I said, it's a zone. Like anything above 60 would be better than where it's at. And it's not that far, but it's going to be difficult. So they need a miracle upgrade or something. They fell on what? There was no earnings or anything, 6% down. So somebody must have said downgrade or something for Solar's earning. Oh, is it a reaction to First Solar? No, maybe. I don't know. Something spooked the market on it. Be careful. 4. You know what? On Enphase, I could sell a put to own shares, but I would need it to be really, really, really low on Enphase. Who is this? Okay, so it's a fintech of sorts. Ooh, all right. I would fade the rallies. There should be resistance from here to 110 and 112 and 116. What's it going to take out of this? I think this spike will be here for probably years. That's premature because we've seen spikes like that and them taking it out, but that's me saying it. So what am I saying? If I'm long from 120 or 22 or 24, I would not add here because it's just as easy to drift down to 88 or 89. Look left, the last earnings report before this one. So I don't want to be that person stuck. Rallies into 110 and 12 are shortable or fadeable. Like if I was long at 118 and now I'm losing a lot, and then the rally comes to 112 and my lot becomes a lot smaller, I would exit if it was a trade. If it was an investment, I wouldn't do anything. If I'm now investing in this company, I would want to sell puts to own shares lower. And if you can't wait to miss out on the upside, then do a stock, not replacement, alternative strategy, selling puts, buying calls, and selling calls against it. So I'm going to liken this area to this area right here, which was April of 2024. They had a spike, and then for some reason they dropped, and then they consolidated, and they dropped again before they took months and months to take out. But you should remember that this period of time here, we had all kinds of tailwinds from the markets. We had Powell doing this, and the exuberance of the election, we had this, we had that. All of this is gone. Okay, so the upside conversation now has very fewer talking points. So this is not the same environment as before. Let's see it do that. And with that, the video one is over.